Welcome back, everyone. This is Thomas Triple T Time with another new bullish crypto analysis. Before we dig in and take a look at the crypto and equities markets, let's remember that this is for edutainment only and not to be considered as financial advice. Additionally, when you find value at any time during the video, feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts and share the videos and analysis with your loved ones. All right, let's take a look at the news, and then we'll dive into the charts and go from there. Fed's Bullard wants to get the rate up to 3.5 by year end, and Bullard it's more hawkish than most, and I think 3.5. He keeps saying in the news cycle that we got to get this inflation under control. No doubt. I think we can all agree on that. 3.5, I think, is reasonable, in my opinion, to help stabilize the high inflation rate. The question is, they keep talking about the soft landing or the hard landing, and that's whether you can cushion the economy so that we don't enter a recession. Can we land? Can the Feds do a soft landing? That's the question. So let's keep an eye on it. Bullard has been very vocal about raising rates high enough to help take care of inflation. There's an article on CNN Business by Nicole Goodkind, and the title says, "The biggest risk to the global economy no one is talking about." And she goes on to talk about Shanghai, China, lockdown, etc. One of the challenges I see in crypto Twitter and also sometimes in the news cycle is that people who use the words that say no one is talking about or very few is talking about. And I think that's an opportunity for them to really do their research a little bit better before making generalized statements like that, because that there's an underlining tone that they're the one that know best and they're the one that is smarter than everyone else. And I've been talking about China and Shanghai for weeks and weeks. She basically reiterated that, with the lockdown, it's going to impact the global economy because of the ties between various economies and China, and how the import is being impacted. We got technology being impacted, and finance being impacted. So it's pretty much what I've been telling you all this time. For weeks. U.S. 10-year Treasury yield touches 2.93, a level not since 2018. So, as you know, some of you may know, the rates increase when price drops. So what causes price to drop? Well, people sell. So when you see a news about 10-year yield or 30-year yield or 2-year yield, and they're increasing, that means that people are selling out of them. They're getting out of bonds. Shouldn't be in bonds in the first place these days. If you're thinking about this, your yield is let's say 10-year. Your yield is 2.93, right? So you gotta wait 10 years to get that rate. In crypto, you can make that on a Tuesday, like in an afternoon on a Tuesday. So, but some people see yield treasuries as safer. But hey, to each their own. But that's what it means. It means people are selling out as these rates are climbing to their record highs. Price of corn hits 9-year high as surge in commodities continue. And corn is just one of the commodities that have been rising sharply. And as commodities rise, we have that contributes to more financial pressure for people, for citizens everywhere. And so you want to monitor commodities because that impacts food and grocery, etc., etc. IMF, International Monetary Group, out of Washington. There, they said they cut their global growth forecast on Russia-Ukraine war. It says that risks to economy have risen sharply. This is according to CNBC. What they're saying is that they're now projecting a 3.6 GDP rate for the global economy this year, and for 2023. So they're basically a drop of 0.8 and 0.2 percentage drop for 2022 and 2023 respectively, and it's just not the Ukraine war too. Let me change that. It's not the evil invasion of Russia to Ukraine, but also like the impact of that, all the sanctions, and then on top of that, you have the situation in China with their COVID lockdowns, and also, economies were recovering. They were impacted just in the prior years from the their COVID lockdowns and situations there. So it's just not Russia or Ukraine. It's a ripple effect of various factors that I've just mentioned. And when global GDP drops down, that means there's going to be a stall in the various economies. This article from CNBC, it says basically the Dow. We'll look at some of these gains here, but the U.S. stock equities market jumped today, and that's mainly due to some positive earning reports from various different companies. This week, next week, and a couple following weeks will be the busiest reporting for some companies for their earnings. So, and that's part of the reason why we see a pop in the stock markets and also in the crypto market. And so, but what you want to be careful about is what happens after this all these earnings, or like earnings later that don't fare very well. So, while the market may rise right now, that may be, not financial advice, an opportunity to take some profit for this if you're trading intra-week or intraday. One of the, I'm not sure if some of you may know, Nassim Taleb. He was one of the few people who predicted the 2007-2008 market crash, financial market crash, and he's tweeted that the NFT thingy is starting to burst. All you need is high interest rates for things to for things that make no sense to start making no sense. I totally agree with him to a certain extent. I think the bubble I don't think it's burst yet. I think it's and I don't think it's starting yet. I think there's hint of it coming. The bubble for NFT is definitely there, and it's gonna burst. Not if, it's gonna burst. But he cited the Jack Dorsey tweet that NFT that once sold for $2.9 million, and now recently was off for a couple $100, and then a few more $1,000, and then so on and so forth. But anyways, yeah, that's gonna burst. That's not an if. So I don't think I think there's hints of it, but I don't think it's starting yet. And we're talking about billions and billions of dollars. So let's see here. Let's go. We have a few more. We'll take a look at the DXY, but this article from Reuters, they talked about the dollar ascending to a fresh 20-year peak versus the yen on the Fed and BOJ policy contrast, the differences in how the U.S. is handling their monetary policies versus Japan's, and that's that gain right there is 1.4% against the yen for the dollar, and the Japanese finance minister warns risk of the yen slumping some more. So And I look at the dollar versus the yen on a daily basis for the on the weekdays anyways, and see how they do. Shanghai urges cooperation with COVID tests amid rising skepticism. An article from Reuters also. The cases outside of the quarantine areas are declining for the fourth straight day, so that's good for them. Shanghai, they aim to stop community level virus transmission. Yeah, locking everyone down and not letting them out and letting only a few out will help you do that. Residents are resisting testing. Say elderly and babies sent to quarantine. They're having challenges over there with getting food to people, having hot water for showering, getting meals. It's a very challenging situation, to put it politely. I hope they get out of it, because that's a lot of people over there. And while that continues, it's going to impact the global economy, import export, financials, because it's one of the major financial hubs for the world. So, last but not least, Britain could fall into recession this summer, according to some experts. And the reason why is because they face two consecutive quarters of where they're dropping in their GDP. So this is as a result of the post-lockdown growth that's not really there, and the inflation, rising cost of rising living costs, and the impact of Russia's evil invasion of Ukraine. And so all those combinations. And why is this important for if you're in the U.S. or somewhere else? Well, because economies are tied together. If Britain go into recession, that's going to impact the other economies as well. And with that, it is time to get into the charts. Here's the crypto market heat map. We have a really nice green day today. Bitcoin 41.5K, up 5.78. Dominance is just below 41% here at 40.97. Ethereum 3.1K, up 6.9%. And dominance is the 19.5%. Luna has a nice pump, over 14% at $94 and 6 cents or 8 cents, somewhere there. So a really nice day for crypto. Some other coins that are popping: VET, FTM, Mana, Ape. Oh God, Ape. I shorted Ape one time. Axie, you got GMT, etc., etc. But remember, stay with the quality coins. You can dabble in a few SHIT coins, but just be safe. Okay, market cap, crypto market cap today is up 5.82% and at 1.93 trillion. We got out of the 1.8 range. That's good. We got up. So very cool. And here's the U.S. Equities markets. We got pretty predominantly green here. We got technology, very green. Microsoft up 1.16. Apple 0.89. Nvidia 1.61. And overall, very, very green here. We got communication services, similar situation. Google up 1.42. Facebook is up. Oh, God. Facebook. Consumer silico also predominantly up. Amazon 2.89. Tesla 2.10. Home Depot 2.08. Yeah, really much brighter. This is probably the brightest sector today, consumer silico. Consumer defensive, not so much. It's muted green mostly. Way down here we have financials, pretty much muted green to some muted red. Financial looks good in banks diversified like JP, Morgan, Wells Fargo, Bank of America. Credit services looks pretty green here. Asset management and capital market, pretty bright green over here as well. We got healthcare. Oh, yeah, except for one big J&J. The rest are pretty red to muted red. J&J reported positive earnings there. That's why the rest are just like hurting. Over here, the rest in medical devices, pretty bright green here. We got medical insurance, pretty bright green. The rest are muted except for some here, diagnostic research here in the smaller companies here. The industrials, pretty bright green. Yeah, looking pretty good there. Real estate also looking really good. Bright greens into muted greens here. Energy is hurting today, from red to muted red. A couple little greens there. Basic materials, we got two sectors in there. Specialty chemicals and chemicals, they're both green. The rest are red. You see here gold is red, other industrial red. So overall, looking pretty nice. Let's take a look at the TradingView charts here. Let's go with the watch list first. As you can see, the Nasdaq index here up 1.71 and then SPX also up 1.25. DJI up 1.15. Yeah, VIX is still over 20 at 21.1, and that's down negative 4.78. And that VIX is, in case you didn't know, it describes the volatility in the it measures volatility in the equities market. The DXY is up 0.06, roughly 100.88. US10-year yield, that's up 1.54 at 2.901. And US oil, that it's still above 100 at $103.72, and that's down just half a point roughly, about. Gold is down 1.07. Silver is down 2.325, 2.3 roughly negative. Euro versus the dollar, that's up 0.19. Pound versus the dollar, that's also up 0.03. And so that means the dollar is weaker against those two. Dollar versus the yen, that's up 1.38. Yep. So dollar stronger there. So let's jump over here in the U.S. markets here and take a look at the trends. Bitcoin has two little pumps here since dropping down to 38.5K. It pumped once here, went sideways, market open, pumped again, and then now slightly dropping. So two pumps in two market openings. And the key here is, will it sustain as we look at the negative correlation with the DXY, all right? So here the Nasdaq index, here we got, it jumped today. You can see that day over day. But if you look at the 7-day trend here, it's still down from its 7-day high. So although it's recovering currently, it's still trending, it's still down on a 7-day. Same thing with SPX, similar curve there, open up and climbing up. DJI, yeah. The Dow Jones Industrial Average. Here we have open up, climb up. On the 7-day, it's more sideways with its, actually change that. It's returning to its 7-day high. You see here. While these two, they're still below their 7-day high. So the DXY here, let's take a look here. Oh, wait, before we go to the DXY, positive correlation with the Nasdaq, S&P 500, and Bitcoin. So here you can see it move, Bitcoin move from here up to here, and the two stock market indexes, they went from here and here. So they both moving up. So like on a 24-hour period, yeah, the positive correlation is there. Currently, though, if you look at here, market open, they both went up. Positive correlation is still there. That's at market opening. But currently, Bitcoin is dropping while equities is kind of chopping sideways. See that? For the DXY, let's look at the 24-hour period first. DXY pretty much climbed in the 24-hour period, right? And so is the negative correlation holding? Not really. Like Bitcoin in the 24-hour also climbed, right? And after market opening here, DXY is kind of like before market open, it went up high. So did Bitcoin. And then Bitcoin dropped, and DXY also slightly dropped. So the negative correlation is not holding there. But here's the thing that you got to keep in mind of. Normally, they have a negative correlation. But the fact that they're not having that right now, it'll return back to that negative correlation eventually. So I'm thinking after or somewhere along the this next few weeks, corporate earning reports and stuff, Bitcoin and DXY is going to return to the negative correlation. And what does that mean? That means that potentially Bitcoin could, like in the meantime, could continue to rise, but eventually it's going to drop as the negative correlation with DXY returns. Let's take a look at the U.S. 10-year yield trends here. Again, continue to rise here due to the fact that people are getting selling their 10-year bonds. So when they sell, price drop. Price and yield are inverse of each other, and so as price drop, the yield rises. So you can see that here, and there's similarities between the DXY and the U.S. 10-year yield in their patterns. They're not exactly one-to-one correlation, but some similarities at this point. Let's go over to the European markets. Here we have UK 100. It dropped down in its last session, and then rose back up. So it's, if you average it out on a 7-day, it's still below a 7-day high, but more towards the middle of the range. On the DAX in Germany, it's popping its current session right here. If you look at a 7-day run, it's still in the middle range of a 7-day. The CAC from France, choppiness in its current session here, and pretty much in the middle range on a 7-day. The stock 600, which covers 600 companies across 70 countries, I think. Yeah, that sounds about right. Anyways, they drop in their current session, dropped and then pulled back up. It's pretty strong. But if you look at where they are, kind of in the middle range on a 7-day. Let's go over to so what we've seen so far. We've seen recoveries, a slight recovery from its recent lows, but moving towards the middle point is what it's looking like. Let's go over to Australia. Australia is having a phenomenal 7-day run. It's climbing in its 7-day run. Last session, a little bit of choppiness, slightly down, but 7-day is looking really good. Nikkei 225, it's recovering in the last 2 sessions here, but overall on average, more towards the upper half, but not the top of their range. KOSPI here, looking really good, and at the top of their 7-day run here, and last 2 sessions has been moving up here. The Hang Seng from Hong Kong HSI here, 7-day run is tanking down. Last session here had a little bit of choppiness. The CSI from Shanghai, Shenzhen, CSI 300, 7-day period, it's a slight trend down, but and the last period, slight trend down, but overall, it's somewhat on the lower half, both CSI 300 and HSI on the lower half of their last trading periods. So China's not looking too good. So that's pretty much the market reading. So what does this tell us? This tells us the U.S. stock market, at least the corporate earnings, is having an impact on the overall bullishness, if you will, slight bullishness in the market, and it's impacting Bitcoin and crypto as well. Slight recovery in the current session, but overall it's still pretty mixed in various markets. We have Australia probably leading the strongest in the different markets, and China and Hong Kong probably the weakest right now. U.S. is is recovering towards its middle range and middle range to upper range, and Japan and South Korea very similar to the U.S. markets. That's it. Couple more videos to do today, and feel free to smash the like, ring my bell, hit subscribe, and share your thoughts, and share my analysis with your friends and family. I'll see you in the next video later today. Peace.